Hey, Cluny, thanks so much for talking to me today. Cluny is from MCAP. It's one of our mortgage finance companies. I really wanted to get on the line ASAP. We've got a new tenancy rule coming out July 18th. And it's basically saying that tenants now are required to get 4 months notice that they have to move out versus the 2 months that are currently required. This is for when either a buyer is purchasing the home and they intend to occupy the home, or a family member. Why I really want to talk about this is I think it's going to have potentially some massive implications on home buyers and their mortgage pre-approvals. One, interest rate holds are 120 days. And now if the tenant of the property that you're purchasing is going to require a minimum of 4 months to move out, the interest rate that you potentially got when you first got your accepted offer and then your mortgage approval might in fact be different. What's the payment on the new rate if things change? And now do I still qualify? So what do you think about that, Cluny?
Yeah, I think it's definitely a big topic of conversation amongst lenders, amongst realtors right now, because we know there's a lot of sellers out there who maybe can't cash flow their rental properties, so are selling them. And
Right.
that means a new purchaser is coming in and saying, I'm going to occupy this home. What they need to happen to occupy the home is for the tenant to leave. So in BC, the seller has to give a notice to end tenancy to their tenants. Previously, like you said, it was 2 months, and now that's going to be extended to 4 months that they're allowed to stay in the home before they have to vacate. So for MCAP, it's definitely a topic of conversation. It's something that we're looking at internally for our policy. Usually, when owner occupied purchase is happening, we require that the people buying the home occupy the home on funding date.
Right.
With this new rule, it might be a little difficult to do that depending on when the offer was made, when the condition was met for the seller to give the notice to end tenancy, and then when that closing date is going to happen. So for us, we've always looked at those situations and said, it is reasonable to know that someone purchasing a rental property may not have the time frame for those tenants to legally have to vacate. So we've always had an exception to policy where when that reasonable situation comes up, we can extend that occupancy date a little further out from the funding date. So it's definitely come up for us before, and we look at each file specific to the situation.
I think that's great. I know you can't speak for other lenders, but
Mhm.
right off the back, the fact that that is already a consideration you'll make, I think that is going to give me as a mortgage broker some ease that there is that option, and also the buyers and the realtors that I'm working with, because the notice to end tenancy falls at the next rent cycle. So if you make that offer, you get an accepted offer on July 20th, it's actually 4 months from August 1. So it's really 4 and a bit months potentially, right?
And I think this is a good conversation to have because it really means for your clients too that they need to have their realtor working with their mortgage broker
Absolutely.
because that conversation, that relationship needs to happen because the conversation is going to be between you and the realtor of what makes sense for a closing date for those clients.
Um,
Mhm.
Another thing that I'm concerned about is the fact that we've got a lot of first-time home buyers who are coming in with less than a 20% down payment. That makes it an insured mortgage. And as we know, a rental property, if there is a tenant still within the home, a rental property cannot be insured. So it could potentially make it so that every home buyer now needs the 20% requirement for a rental property if we don't have lenders like you that are willing to make those exceptions. Again, I know you can't speak for the insurers, but what are your thoughts on that?
Yeah, I think the insurers are always very reasonable as well. Obviously, it's always disclosure to an insurer about the unique situation that each file has. So, in a situation like that, if someone is purchasing a home with less than 20% down as owner occupied, that's totally fine. We just can do that reasonable extension to occupancy if required. I do think there will be some coaching with realtors coaching their clients who are
Yes.
selling. If it's a rental property, kind of knowing we have to have a longer funding date. So the closing of that purchase may need to be instead of, in 6 weeks' time, maybe that's pushed out to 2 or 3 months to accommodate having that requirement for the notice to end tenancy to be done in a reasonable time frame.
The last thing I want to ask you about is, as we mentioned, rate holds are 120 days. I'm thinking of this strategy to help my clients because we're thinking, okay, let's say it does go the full 4 months. We get you a rate, we qualify you at that rate on, let's say, August 1, and the tenant isn't able to move out until, 4.5 months later, and your closing date is, in fact, it's okay by you, it's 4.5 months later. Well, after 4 months, the rate that you've got expires, as does the qualification.
Mm-hmm.
So I'm thinking what we do, knowing if it's going to be pushed out, okay, we qualify you on August 1. And then as soon as we know we are again within that 120-day period, we resubmit or we redo your file. Everything's already been in place, and we just say, hey, we need to now get the date as of now and push that out 120 days. Does that make sense?
Yeah, 100%. And I think that's going to be where the strategy comes. Like for you,
Right,
Jordan, as a mortgage broker, you've obviously thought this through. And the strategy is recognizing those timeframes that you need to work within. And whether that means, if we can't get in for occupancy until after that 120 days, there's
right,
that potential that rate is going to change, whether it be
right,
up or down. It's so hard to project. And I think
right.
a strategy for you is knowing to stay within that 120 days, especially when you're working with a lender who's able to accommodate a later occupancy date. So I think as we see lenders come in with their responses to how we're going to work with this, I think there's definitely potential to be able to keep those rate holds. But if we can keep the funding within that 120 days, at that 120 day mark, they have 2 weeks until they need to move in, that 4.5 month. Um, that's a reasonable occupancy extension.
That way
Mm-hmm.
our clients know what they're paying, know what payment they've got, and know that they qualify.
I think a lot of the time, maybe someone doesn't have a mortgage broker when they're working with a realtor. And it's really important that you have a mortgage broker along the whole journey of that home purchase because you're going to get great advice like you're giving, Jordan. And I think that's really important for the average consumer to know. Mortgage brokers like you are here to help you
Yeah,
navigate the purchase, knowing the rules that are changing. This industry always has rules that change, new policies that come in that will affect your home purchase. So 100%
right.
having someone like you in their corner is going to make the transaction way smoother.
Yeah, it's not getting any easier. It really does take a team. And thank you to you as a lender as well for helping explain these things, and as always being a great lender to help our clients. So thanks very much for taking the time, Cluny.
You're welcome. Thanks for having me, Jordan. I really appreciate it.